Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that at the moment the market is testing previous monthly resistance, which is now turned support. In fact, from here, this previous move to the downside was created after the market broke above the zone, so this previous resistance was turned support here. So at the moment we have previous monthly resistance turned support that the market is currently testing, and from which there is a possibility to see a potential rejection to the upside for the completion of this impulse correction and impulse pattern to the upside. So from a monthly perspective, everything seems quite bullish, and we could expect a potential rejection to the upside away from this area. We can also notice that, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements, which are currently lining up exactly with this previous resistance turn support, creating a confluence of support inside of this zone, inside of which we could see some institutional longing, which at that point would further increase the probabilities of making the market create a rejection to the upside. Now, why we have a good chance of a move higher? Because even though we have very strong resistance at this zone from which all these previous rejections to the downside were created, we already have the correction, and currently we are inside of this confluence of support. So there is no better zone than a confluence of support inside of which we could see institutional longing that at that point would finally make this market break above this previous monthly high. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, things start getting quite interesting. In fact, from a pattern standpoint, what we can notice is that we had an impulse correction, lower low and equal high. Now, generally speaking, when you have an impulse correction, lower low and equal high, after that, what you would expect is a correction before then having a move to the upside. So essentially, what you would expect is the creation of a right shoulder here for this inverted head and shoulders to be printed. Now we can see that that has already started with the market creating this move to the downside. So if from here we will see a move higher, that would essentially create this inverted head and shoulders, which is exactly the pattern that we would like to see in a situation like this. We can also notice that if we look at the structure of this market, we can see how exactly here is where we have the support and resistance, so essentially the historical structure. In fact, if we look left, we can see how from here all this move to the downside was created, then the market broke above that zone, and this previous resistance became support here. The market respected the level as support and created a rejection to the upside, and again here the market respected the level as support, and we had the break below, break back above, and this previous support started acting as support again just now. So from a level like this, what we could expect is a potential rejection to the upside. At that point, potentially completing this impulse correction and impulse pattern to the upside, and for the market to create that weekly inverted head and shoulders. Dropping down on the daily time frame, what do we see? Now, even though the monthly and weekly are quite bullish, if we go down here on the daily time frame, we start to see some problems because from a daily perspective, this market is clearly in a downtrend creating lower lows and lower highs. Now, if a market is creating lower lows and lower highs, you cannot expect a move higher because clearly it means that this is a bearish market. So what we need in order to continue higher for a market like this is to see a break of structure. So a break of this structure back from a bearish market as we have right now to one of a bullish market. And that would only happen if we actually get a break above this previous high, because this is the previous high, therefore is the resistance zone. So only if we get a break above this resistance after the break on the retest of the previous resistance turn support, that is where we would have good probabilities of seeing some institutional longing, at that point further increasing the probabilities of creating a rejection to the upside for this market. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we look at what is going on here, we can see how even though net positions were first getting increased and now slightly decreased, we can notice how we don't see any shorting yet. We actually see shorts getting closed with the last report, almost 600 shorts getting closed. This means that even though this market is in a bearish trend, institutions are, at least at the moment, not interested really in the short. Now, this means that if the market is to break above this resistance on the retest, since they were not interested in the shorts, inside of here, we could start to see them adding longs. That is exactly what we would like to see, because at that point, that would give the fuel that this market needs in order to create a rejection to the upside. So if we get a break above this resistance on the retest, if we see institutions increasing their net positions, meaning moving to the bullish side for gold, potentially also adding longs, at that point, that would increase quite a bit the probabilities of this market to create a rejection to the upside away from this support, and also completing this impulse correction and impulse pattern to the upside. So if we get the break on the retest, if we see institutional longing, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, so you can get a full refund credited back into your trading account. And if you scroll over, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.